Berkshire Hathaway, what's it worth and where's it headed from here? Today we're going to assess some of the fundamentals and then we're going to run a valuation to see where it should be headed in the future. So we've got a price per share of $403.26, a price to earnings ratio of 9.17, a market cap of $871 billion, and an enterprise value of $972 billion. If you don't know what Berkshire Hathaway is, here's the description. Pause the video if you want to read it. Looking at their financial strength, the company has a cash debt ratio of 0.3, so for every dollar of their debts, they have 30 cents to pay down those debts or expand the business. Since they don't have gross or operating margins, my main focus here is on the free cash flow as well as the net margins. And we see for their net margins, they currently have 21.9, whereas their maximum in the last 10 years was 25.35, and their median is 13.14. So well above that median, just below the maximum. Pretty solid net margins, both versus the industry and their historical performance. Based on free cash flow, their current is 6.78 with a median of 8.73. So this is the minimum they've achieved in the last 10 years for their free cash flow. I use ROE, ROA, ROIC to tell me a little bit about management. And we see that versus the industry, they're doing fairly well. And versus historical, they're on the upper end of what they've achieved in the last 10 years. Looking at the price to earnings, currently they have 9.17 between their minimum and their median for the last 10 years. So possibly a decent buy signal because it's nowhere near that maximum and well below that median. When we look at their financials, we can see that 10 years ago they achieved revenues of $162 billion and net income of $14 billion. And in their most recent, they have $440 billion in revenue and $96 billion in net income. So a fairly decent signal. The trend is up and to the right, although there is a couple of down years, but up and to the right. Looking at it on a trailing 12-month basis, we can see fairly steady. They did have some down years here, although back to business as usual. And with their cash to debt, it looks like the debt is outpacing the cash. So not exactly what I want to see, but then again, debts are not always a bad thing. And we do see significant share buybacks all throughout these quarters. So increasing shareholder value by buying back shares and decreasing the amount available. But to see where it could be headed in the future, let's run a DCF. Before we do that, if you like these type of videos, make sure you hit the like button, subscribe, and if you have any questions or commentary, leave them down in the chat below. So inside the DCF, we have 1-star predictability, not optimal. We only have data on the 3-year average for earnings per share, and for free cash flow, it looks like 6 to 7% growth annually for free cash flow. So based on free cash flow here, with 6.7% priced in, there's a fair value of 176, whereas currently we're at 403. There's about 19% priced in for the next 10 years, so significantly higher than what they've achieved in the last 10, 5, or even the last 3-year average, signaling that the company is trading for a premium, and for that fair value to be higher, they would need to achieve higher than that, and obviously lower. Looking at earnings per share and seeing what's currently priced in, there's between 1 and 2% priced in for the next 10 years for earnings per share. So based on an earnings per share standpoint, there's very minimal growth priced in, considering that over the last 3 years they've achieved 27% annually. But again, we have no data for the 10-year average or 5-year average. So it looks like it's trading at a significant discount based on earnings per share and a pretty wide premium based on free cash flow. But this is a fairly entrenched business. They have very wide moats and some pretty high net margins. So they are generating a lot of revenue and they're netting a lot of that revenue. So you're paying for a little bit of that stability, that wide moat, and the Berkshire Hathaway name, of course. But this is my analysis and take on Berkshire.B, Berkshire Hathaway stock. If you enjoyed this video, leave a like, make sure to subscribe to the channel so you can find videos like this in the future, or even be around for my cheaper videos where I find undervalued businesses and I share them with you guys. See you next time.